Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 17th of August. And the descent continues down from the 7600 area, the 200-day moving average, all within a falling trend channel from back in February. The floor of that channel currently heading towards 7150, which has got to be the worst case scenario at the moment. Otherwise, probably looking to retest the July support area towards 7230. This stage, the earliest let-off would be an end-of-day close back above that mid or early July support there around the 7400 area. So that's probably the framework on a technical basis to look at on the FTSE 100. 50-day line falling, RSI towards oversold, but not quite there yet. Historically, whenever we get to RSI 30 or below, that tends to be a buying opportunity. We had one of those back last month. Also in the end of May, beginning of June, and then obviously in March as well. So just maybe a day or two away from a potential rebound scenario for the FTSE. On to the DAX, and here we're below the floor of that trend channel there from back in August last year. So it looks as though below that line there, around 15,600, we could head back down towards 15,400. And last month's support, worst case at the moment, is that we head back down to the 200-day moving average area, 15,300, before support comes in. RSI still above 40, so that does actually leave a bit of wiggle room for the market to roll over. 50-day moving average also falling now. We need an end-of-day close back above that, really, to negate the aftermath of what was really a May, June, and July triple top for this market. On to the Dow, and here it's obviously looking a little bit better, or was looking a bit better than the FTSE and the DAX, but the fears that 35,000 would give way and we'd head back towards the 50-day line look as though they're going to come to pass. So 34,600 at the 50-day line. Below that risks the floor of that rising trend channel from last year around the 34,000 level itself, and obviously the 200-day line just below it. RSI has fallen below neutral 50, so that's another negative, and suggests that the 50-day line is probably the best we can expect, but there is still this possibility of a move down towards 34,000. On to the situation at Bitcoin, which has been surprisingly unvolatile until now, but here we're looking at that 50-day line, which is now curling down. We've got the market breaking recent support around the 28,600 level. That does suggest that we're going to have to hit the area of the 200-day moving average, 27,200, before any recovery gets going. We haven't been down to the 200-day line since back in March, so that would be a little bit disappointing. End of day close above the 50-day line would cancel the negativity, but at this moment it looks as though we are heading towards that 200-day moving average. Onto the stocks, and we're not exactly sport for choice at the moment. Starting off with Artemis, and here we've been encouraged by the way that the shares had an unfilled gap to the upside back in June. We've never gone back below the top of that gap there at 0.72, and since then we've seen the shares find support above the rising 50-day line. That tends to be a precursor of a move to the upside. So we're looking for 1.4 pence. The longer we stay above a penny on Artemis. On to Beacon Energy, where I suggested that shares could be heading towards the 0.14 area, and we'll see that we've not done too bad a job so far. We gapped up through that falling wedge last week, and since then made good progress. It's a bear trap gap reversal, and looking for that 0.14 as a minimum now, while we're above 0.1. And if you're a fan of the shares and looking for potentially greater upside, that would come in the form of a move to the line I'm about to draw, which is the upper parallel of the April resistance line projections. So that's 0.17 perhaps by the end of next month within that post-April triangle. Moving on to EQTEC, which is looking a little bit more buoyant in terms of its price action. You'll see that we've got the shares finding support at and above the 50-day line at the moment. Just waiting for that to curl up. We've got an unfilled gap to the upside yesterday, really looking just for an end-of-day close through the 0.19 pence level to give us a target as high as 0.26 by the end of next month, while we remain above that 50-day line. Bounced off RSI 50 as well, so that is quite encouraging. On to Galileo, and here the picture is one of basically holding above the unfilled gap to the upside that we had last week. Initial target here was towards 1.4 pence. Maybe 1 to 2 month view is up to 2.2 pence at the top of that broadening triangle from this time last year. But while we're above that 50-day line, feeling quite chirpy about Galileo's prospects. Next up is a requested stock, which I think requested from a few days ago, Genincode. And here we've broken a line of resistance there from March, broken above the 50-day moving average as well, around 12 pence above that. Looking for the shares to not only retest post-May resistance around 16, 17 pence, but head up to as high as 27 pence by the end of next month. But obviously there'll need to be a little bit more action there to get that to happen. But it looks as though the pullback from back in February has run its course. On to Hummingbird, which has been showing some tentative signs of recovery this week. Here we bounced off the 200-day moving average, rising 200-day line, got bullish divergence, so looking for 14 pence over the next couple of weeks, maybe by the end of this month, while we hold above that 200-day line at 10.5 pence. Utopia is next, and here, interesting that the company put out an RNS regarding its cash runway, which seems to be at least a year. Here we've got the target initially was up to the 6 pence area, which is the 50-day moving average. End of day close above that, we'd be heading up to towards 10 pence by the end of next month. Ideally, we stay on the right side of 4 pence, i.e. there's no new low ahead of such a scenario. But if you're cautious, probably just wait for an end of day close through that 50-day line and recent resistance. Mirriad is next, and here another tentative recovery situation. We've got a rather complex sort of price action and charting pattern over the recent past. Obviously the May spike was sold into, but it looks like we may have a rising trend channel base from last month, top of that channel up to 2.1 pence, and we're looking for that while we hold above 1.2 pence recent support. If you're cautious, you wait for the RSI to break back above neutral 50. We've already had the shares backed, or this recovery backed by bullish divergence in the RSI window for July. Just covering Pathfinder next, which always fills one with a certain degree of trepidation given the history of the stock, but we did actually have a bear trap gap reversal, which I missed, through the 50-day moving average. We've held that. We've had another gap this week as well. So looking for up to 0.8 or 0.85 over the next 2 to 4 weeks on this situation, even though technically we haven't been out of that 0.3 to 0.65 range for the 2023 to date. On to the last three. First one is PIX, which had a decent update today. And here we've already been looking at this as a potential recovery with the break of that resistance line from June and the 50-day line at 23 pence, above 23, looking for 35 at the top of that rising trend channel base from January, and the 50-day line rising nicely, V-shaped bull flag here at the 200-day moving average, so looking pretty good there on PIX. Skinbio is next, and here we've got a situation where the shares have done us proud in terms of the break of that resistance line there from March, also broken above the 200-day line at 17 pence. And the longer we stay above the 200-day line, the greater the chance of move to 32 pence as soon as the end of next month. 50 and 200-day lines now both rising, which tends to be a strong part of the cycle, given that it's a run-up potentially to a golden cross. Finishing off with a stock which has really been in the wars, Tomco, but here first signs of recovery set on the basis of this sideways shuffle above the 50-day moving average, which is now rising. The fact that it is rising can be a decent signal when you're near the lows, and looking for basic resistance on the way down towards 0.17, 0.18 over the next 2 to 4 weeks. Bullish divergence line there as well. So most of the decent triggers there, along with the bounce off RSI 50 for Tomco. That's it for me today. More updates tomorrow.